Hey guys, so I built a $2.4 million franchise business, and if I wasn't able to get the funding for that business, I never would have been able to start the business, generate the sales, and make the money. So in this video, I'm going to share with you 7 simple ways that you can get the money for starting the business that you want to start. And even if you already own a business and you're just looking to get more capital for this business, this video is going to help you as well. So if this is your first time here, firstly, welcome. Again, my name is Tariq Johnson. I built about a $2.5 million franchise business, owning locations in multiple states in California and in Florida. So my wife and I secured over $300,000 to open up our first location in California, and we were actually able to get that location profitable only our second month in business. In less than 60 days, we were able to get that location profitable. I actually wrote a completely free blueprint. It's called my 7-step blueprint to business profits in 60 days. You can grab it, it's completely free. I outlined step by step exactly how we got that business profitable from the very beginning. So make sure you grab it. You can get it from my website. I'll leave the link down below. And so hopefully that'll help you in starting your business so that you can make sure to get profitable as soon as possible. All right, so let's jump into the video. So only about a third of businesses actually hang around for about 10 years. So that means about 70% of businesses fail within that first 10 years of being in business. That is, 1, a scary statistic, but 2, you should be aware of the reality that most people fail so that you can do everything in your power to make sure that you succeed as a business owner. So let's hop into number 1. So the first way to get funding for your business is an SBA loan. The reason why I start with an SBA loan is because this is one of the most common ones that people think about or they've heard about in terms of funding their business. Although it's not my favorite option. I don't think that an SBA loan is the best option. So what is an SBA loan? So SBA stands for Small Business Administration. So the Small Business Administration is a United States government agency that was designed to support entrepreneurs and small business owners. And I'll make another video, completely separate one that's incredibly detailed on SBA loans because it's really a long topic to cover, and I'll go into the pros and the cons and the way that they work and all the details and intricacies of how an SBA loan works, how you can get one, and if it makes sense for you. So make sure you subscribe down below so you don't miss out when I post that video. Also, while you're down there subscribing, make sure to hit that little like button. The YouTube algorithm loves when people hit the like button, and what it will do is it'll help this video get shown to other people who have the same questions as you. All right, so if you are in need of an SBA loan, you can get it from your local bank, your local credit union, or an online lender. I'll leave a link down below. I have a really trusted source, a company that's been in business for 17 years and is one of the leaders in funding for small businesses. So if you're interested in getting pre-qualified for an SBA loan, you can click on that link below, and you'll have someone who will reach out to you and walk you through the different options and how it works. And what I have found is when you're funding a business, when you're starting a business, you need as many people in your corner as you can. I mean, you need people to go to that have been there before, who have funded deals before, who have started businesses before, because there are so many nuances to starting a business, to funding a business, and you can waste a lot of time just figuring out the answers to some of these questions. That's valuable time that you could be putting in your business to make money. So make sure if you're interested in getting that funding or an SBA loan to use that link and use that resource because this company has funded hundreds of millions of dollars of funding for small business owners. So SBA loans, according to their website, can range from as little as $500 all the way up to $5.5 million. Now, depending upon the lender that you actually use to fund the SBA loan, depends on what their minimum size is for the loan. Generally speaking, all SBA loans have the same eligibility requirements, but they can vary by lender. So all an SBA loan means is that the Small Business Administration is backing and guaranteeing that loan. They're not the ones issuing that loan. your bank, your credit union, the company in the link down below, they're the ones that are actually issuing the loans, and then the SBA is just guaranteeing it. So it's just basically the SBA saying, hey, if you default on the loan, the SBA will come in and provide that money back to the bank, the credit union, the company, whoever it is that lended the money. So it's important to know that you're not getting the money directly from the Small Business Administration. All right, so here's another thing that you got to know about SBA loans is that generally speaking, like according to the SBA website, they want that to be your last funding option. So they want you to have exhausted all of your other options before you come asking for an SBA loan. And generally speaking, SBA loans have a fairly high interest rate. It's somewhere between 5 and 9% depending upon the lender, depending upon a variety of different factors. So the interest rates are a little bit higher, which I'm not a huge fan of, but it's a really great option for individuals that are having a hard time getting financing. Another thing to know about SBA loans is you have to have some of your own money invested in the loan. So if you have absolutely no money, then the SBA loan is not the best option for you because you do have to have some of your capital at risk in order to be able to get approved for an SBA loan. SBA loans tend to be really good for like a large one-time investment. So if you're buying an existing business, if you're trying to finance equipment to start a business, SBA loans tend to be really good for that. For me, I own franchise businesses, although I never used an SBA loan for my franchise businesses, could be a really good option if you're looking at buying like an existing franchise business. All right, so number 2 is a HELOC. HELOC stands for a home equity line of credit. So when I say HELOC, it's really your house. Your house is the second funding option if you own a home. If you don't own a home, make sure you stick around because we'll hop to the third funding option, which will be applicable to you. But it's important to know what your options are or what your options could be in the future. So your house, if you have equity in your home, is a way that you can fund your business. What that means is that, let's say your house is worth $300,000. You owe $200,000 on your house. That means you have $100,000 of equity in your home. That means you can take that equity out of your home to fund your business. In the example of my wife and I, when we opened our first franchise location in California, this is how we funded our business. We had a significant amount of equity in our home. So we took out a $310,000 home equity line of credit. That's what we used to fund our business. Now, there are a lot of advantages to home equity line of credits. There are also some disadvantages to home equity line of credits, and you have to be really careful because you're using the equity in your home. So if that business flops, the business is no longer running and, basically the business winds up flopping, you got to be aware that you're going to have that debt on your house and you're going to have to still pay that off. So I want you to be aware of that, but it is a great option. Generally, home equity line of credits have lower interest rates than most loans. Another benefit is that it's a line of credit, meaning it's like a credit card in the sense where if you get a $20,000 credit card, you can only charge $2,000 to that credit card. Once you charge the $2,000, you can pay the $2,000 off, and then you still have a $20,000 limit on your credit card. You're not paying interest on the full $20,000. You're only paying interest on what you use. That's how a home equity line of credit works as well. You're only paying interest on the amount that you use. So when we had our $300,000 home equity line of credit, in the beginning, we used the first $25,000 to pay our franchise fee, and then we still had $275,000 left on that line of credit that we were not yet paying interest on. And it wound up being a beautiful thing because it took us, about a year and a half to get that location open. That's a long story. If you want to know that story, you can check out some of my other videos. Actually, I'll post a video right here or right here, one of those places. I'll post a video right up above that tells you the entire story about how I built the $2.4 million franchise business and exactly how I funded it step by step, how I thought about the process, how we bought our second location, and basically the whole story of building it. So make sure to check that out and after this video is over, and it's really interesting, and hopefully you're able to take something from it that you can use to build your own successful business or empire. So another thing about a home equity line of credit is that the interest that you pay on a home equity line of credit can potentially be tax deductible. So that's another attractive option as well. So it's something to think about. I have a client that I'm coaching right now that's wanting to leave his job. And when we were looking at how to find ways for him to get the money to start his business, he didn't have a lot of liquid money, meaning money in like checking, savings, investment. So really, this was the best option for him because he's got a significant amount of equity in his home as well. So, that's one of the things that I work on with some of the clients that I work with is, one, figuring out how to fund your business, figuring out what sort of business to buy or to look at or to start, and really then how to get that business going and how do you operate it, because owning a business is very different than working for someone else. All right, number 3. Now this is a very interesting one. A lot of people have no idea about this funding option for your business, which is you can use your 401k or your IRA to fund your business. So yes, I know what you're thinking. You can use your 401k or IRA to fund your business without a tax penalty. Interesting, right? Term for it is ROBS, which means rollover for business startups. And basically you can wind up using your 401k or your IRA to fund your business and not wind up getting any sort of tax penalty on it. Because typically if you take money out of your 401k or IRA, 1, it counts as taxable income, so you have to pay taxes on it, unless it's a Roth IRA. And then 2, if you're under the age of 59 and a half, then you got to pay a 10% penalty because you took the money out early. So a ROBS, rollover for business startups plan, allows you to do that potentially without any penalties. Quick disclosure here, it is very, very important that 1, you work with a company that specializes in doing this, that you do not do this on your own. An attorney has to be involved in this process. There are companies that handle that part. You don't have to find the attorney, but you do have to pay them a fee in order for them to set it up, because the back end of it is complex. They'll make it easy for you, but the back end can be complex. So you have to work with someone who knows what they're doing when you do this. That same company that I've partnered with and that I recommend to get pre-qualified for SBA loans or any sort of business loan, they've been doing these plans for over 17 years. They're actually the industry leader in the space for ROBS, rollover for business startups. They've done tons of them. So if you are interested in doing that, click that link below, do the pre-qualification process, and then one of their representatives will reach out to you and explain to you and walk you through the process and actually have a free consultation with you on your situation and what is the best way to fund your business. So make sure you don't miss out on that opportunity. Now, another thing to note real quick is, generally speaking, you can't use your existing 401k through your employer. There are some caveats to this, so there are some circumstances where you can. I'm not going to go into this in this video. Again, I'll create a more detailed video about rollover business startups, how they work, all of the details, all of the nuances, all of the ins and outs. So make sure you subscribe so that when I release that video, you have all of that information. All right, so number 4 is your savings. It's your own personal savings or investments. The majority of businesses are funded by people using their own savings accounts. Here's the one thing that you have to be cautious of, because this is the most straightforward and simple one, which is you have money in your savings account, use it to fund your business, right? There's not a lot that we need to go into here, but here's what you got to be careful of. You have to make sure that you're still leaving money for emergency expenses and for the fact that your business could wind up taking and requiring more capital to start than you may think. So you may think it's only $5,000 or $10,000 to start your business. Let's say you have $15,000 saved. Well, maybe it winds up costing $15,000 to start your business. And now you have no money in emergency expenses. And your genius business idea that's really great, that you just need another couple of months to really get up and running, all of a sudden you don't have any more cash, and then it causes problems, and then maybe your business fails. So just be careful. And even if you have money in savings, if it's tight, and if using your money in your savings account is going to cause you to go below the 3 to 6 months of your emergency expenses, figure out another way to fund your business. Now, that's not a hard rule, because there are a lot of people that have gone all in with their personal money and started a very successful business. I mean, it just depends on you and yourself. And look, the best investment you can ever make is in yourself. But what I'm saying is tread lightly, have a plan, have a strategy if you're using your own personal funds. So in the instance of my wife and I, when we started our business, we took out the $300,000 home equity line of credit. I mean, we had a good amount of money in savings. So we did it because we didn't want to use our savings. We wanted to have that buffer, have that liquidity, and be in a strong cash position. And we financed our business 100%. Although once we sold our house, the home equity line of credit got paid off, and then we owned our business outright. All right, number 5 is your friends and family. Friends and family. Whew, I know. This one is like a weird topic to talk about because I think probably, maybe like me, a lot of you might cringe thinking about the idea of funding your business with friends and family. The reality is a lot of really successful businesses that are out there, publicly traded companies that are on the stock market, started out with people getting money from their friends and family to start the business. So I know that Mark Zuckerberg, Facebook, he started funding it initially from friends and family. The guy from Barstool Sports, I forget his name as I'm making this video. I mean, he got money from his parents. It was actually money I think that he was supposed to use for college. Just be careful here. Make sure that if you borrow money from your friends and family, that you have a written agreement when you do it. It's in writing. You have terms set for it. Don't make it loose. I mean, that's when just drama can wind up happening, and just be careful there. Again, tread lightly, but this is a great resource. I mean, if you have a really good idea, you're a professional, you have a track record of making good decisions in your life, then heck, use that as one of your funding sources. It's probably going to be a lot easier in terms of getting the money quickly than going through the process of getting a loan. All right, number 6. Number 6 is an interesting one. Depends on what type of business you're looking to start, but crowdfunding. So a lot of businesses these days are getting their funding by doing crowdfunding. Crowdfunding is basically when you go out and you have a high volume of people, or a certain amount of volume of people, provide funding for your business. There are different ways in which crowdfunding works. Some popular crowdfunding companies are Kickstarter, Indiegogo. There's a lot of different companies out there. I'll leave the names of some of them below in the description. But these are really cool options. And so you can do like a rewards-based model, which is you basically have tiers. You say, if you give me $100, let's say I'll give you a t-shirt. If you give me $250, I'll give you one product for my business. If you give me $500, I'll give you this many products for the business, so on and so forth. Another way of crowdfunding is that they're actually getting some sort of equity position in your company, meaning that they have a small percentage of ownership and maybe you pay them a dividend. But it's a way to raise money. Actually, Uber, at one point, before they were publicly traded on the stock market, they did crowdfunding. A guy that I work with said when Uber was on a crowdfunding platform, he put $1,000 in, and I think he said like 3 or 4 years later, it wound up turning into $30,000, which is crazy. So not only is crowdfunding a great way for you to raise money for your business, but if you're looking at different investment opportunities that are more speculative in nature, don't go putting all of your money in here, go look at some business opportunities and some businesses that are crowdfunding. There's some really solid companies out there that have a great track record, that are already making a lot of money, that are profitable, that are just looking for ways to generate more capital for their business. So that's number 6. Again, make sure you stick around to the end, because I'm going to share a piece of information that's really important in terms of thinking about how you fund your business. But let's jump into the last one. So the last way to fund your business is either a personal loan or a credit card. I left this as the last option for a reason, is because it's my least favorite. The reason why it's my least favorite is because generally it's going to be the highest cost of capital, meaning it's going to have the highest interest rate. So if you use a credit cards usually are going to range somewhere from 10 to 25% to get money from your credit card. Now, the way that you can use your credit card to fund a business is that, you get those letters in the mail from credit card companies where they give you basically a blank check and it's 0% financing for 10 months or a year, 18 months or 24 months or something like that, but you pay like a 3% fee of that amount up front. So that could be a viable option for you and a quick way to get money to start your business. Again, I would probably only use that sort of option if you really know that you got a slam dunk idea and that you got revenue that you'll be able to make easily. But it's a way to bridge the gap. It's a way to get your business up and running and start generating revenue, and then you could potentially use some of these other sources as you go on in continuing to start, build, or grow your business as you make money. Outside of just using a credit card, so the other one is just an unsecured loan. An unsecured loan just means that it's not secured, doesn't have any collateral. Car loan is secured by your car. If you don't pay, the bank can repossess your car. A mortgage is secured by your house. If you don't pay for your mortgage, then they can foreclose and the bank can take your house. An unsecured loan basically means there's no collateral. So because of that, the interest rates are much, much higher, and banks are generally not going to lend you as much for an unsecured loan. Like some banks may only be willing to give you $2,000 or $5,000 for an unsecured loan. Some banks might loan as much as $20,000, $25,000 for an unsecured loan. But again, this is my least favorite option, but use it if you need to. Here's what I want to share, and here's the last part about funding your business that is really, really important. So when thinking about funding your business, the strategy and method that you use is important, but here's the most important part about, it's an airplane. Here's the most important part about you funding your business. It's you. There are so many entrepreneurs that figured out ways to fund their business. If you don't have the money, or if you don't have enough money to fund your business, it's not about the resources, it's about your resourcefulness. How resourceful are you willing to be to get the money to fund your business? How confident are you in yourself? How confident are you in your idea, your concept, your business plan? Do you already have people that are telling you that you have a certain skill set and they'd already pay you to be a customer? So I want you to think about this, because I get a lot of people that reach out to me because of this YouTube channel and they want me to coach them. And I do have a coaching program, so if you're interested, you can go to my website and apply to work with me. I only work with a limited amount of people. But sometimes people get so caught up on getting the money for the business. And if you're resourceful, if you're committed, you'll find a way to get the money. You'll find a way to get the money to fund your business. And a lot of these tech companies, Twitter, Facebook, Uber, Airbnb, do you know the founder of Airbnb? They sold, Obama cups, Obama and McCain cereal during the election. They sold like limited edition boxes of cereal that they had printed for like $40. I think they sold 1,000 units for $40 each and raised $40,000. And that was one of the ways that they got the capital to start and grow Airbnb. Think about that. Think about how resourceful that is. So when someone says, I don't have the money to start my business, be resourceful. When there's a will, there is a way. And so there's a way for you to start your business. If you don't like any of these traditional methods, or if none of those work, or you're completely broke, it doesn't matter. It's what is inside of you and how you can figure out to get the business. If you're confident in your idea, there are people that were absolutely broke when they started their business. They're multimillionaires and multi-billionaires now. So I want you to know that no matter where you are now, it does not determine where you can be. So if you like this video and you made it to this far, I appreciate you. Make sure you subscribe, make sure you hit like, and drop me a comment below and tell me about what kind of business that you're looking to start, that you're looking to grow, that you're looking to buy. And I look forward to connecting with you and seeing you on the next one.